All right, everybody, welcome to the impromptu live stream on Wednesday. And just like the title and thumbnail suggests, we're going to dive deep. Well, just an overview of what's going on for this new law. Looks like it's US Code 6050I. And there's been a lot of talk, especially about in the Twitterverse and on different social media sites, that this law goes into effect. And it means that if you don't report the $10,000 plus of your crypto within 15 days, you're going to face a felony charge. And I didn't really know much about it. I just saw that was going on. So I reached out to somebody that could help me. Shihan Chandrasekhara comes on as the crypto CPA. Shihan, welcome back to the show for the 6th or 7th time, I think.
Yeah, good to be here.
Yes. So actually, like, I had heard about it, and then you reached out to me, and I'm like, I don't know what really is going on. But before we get into all that stuff, I just want to remind everybody that if you're watching the replay, just know that there's going to be a scam video, because that's what YouTube's all about. And it's going to be an AI video. It's going to look something ridiculous like this. It's going to be Michael Saylor. It could be any number of people that are big into the in the crypto space. And they're going to say, scan this code and I will give, if you send me 1 Bitcoin, I'll send you 2. Newsflash, that is not reality. What is reality, unfortunately, is tax codes. And this is everybody's favorite subject, taxes, I'm sure. And this was actually what was sent to me. This is Ryan Sean Adams, and over there at one of the duo for Bankless. And he states, if you're a U.S. citizen and get $10,000 or more in crypto, you have to report to the IRS within 15 days, or they can charge you with a felony. That starts today. They want your name, your address, your social security number of the sender, and they're not telling you how to file the report, which I got to be honest with you. It's very easy to pile on the government, especially when we see stuff like this. And also, I saw the same thing from Jerry Brito. He is the executive director of Coin Center, DC-based crypto think tank. And he says the exact same thing. If you receive 10K or more and you don't report it within 15 days, you get a felony charge. So I reached out to Shihan and I was like, is this true? Because if it is, I'm in big trouble. And he said, no. So let's go over this 6050I code and what this really means. Shihan, it's up to you.
Cool. So I guess let's start with the current law, right? So basically, the 6050I code section of the IRS says that if you run a trade or business, in simple terms of business, and if you receive paper cash in excess of $10,000 in a transaction, let's say, for example, I go to a dealership, like a car dealer. Instead of cutting a check or giving my bank account information, I just give them, $20,000 worth of paper cash in a duffel bag and buy a car.
Sounds good. That's what I do.
If that were to happen, the dealership has to collect my personally identified information, meaning my social security, name, address, and etc., and file a tax form called Form 8300 with the IRS and the FinCEN. So that is the rule.
Okay.
And you might ask why we have this rule. It's to combat against, money laundering, terrorist financing, because otherwise, you can earn, money to illegal means and kind of convert it to goods and services without being caught. So that's the idea behind these existing laws that applicable to cash transactions.
Okay, so let me get this straight. So what you said. So I go into the dealership and I want an upgrade for my 2018 Dodge Grand Caravan minivan, which is a sweet ride, I must tell you. Very good in gas mileage, very great in space. And I come in there with the $23,000 that it costs. And the dealership, Dicpo Toyota in El Paso, Texas, or wherever else, or Honda here in Puerto Rico, they say, hey, you just gave us all this money. We need to collect a bunch of information from you because we don't want to be held responsible for your money laundering activity, which we're not saying you do, but if you are, we have your information and we can report it. So that has always been in effect. Is that correct?
That is right. Yeah.
Okay. All right. So now let's flip it on its head and talk about this new rule, because has this law been in effect, the 6050I, and there's been some changes to it to include virtual currencies?
Yeah, exactly. So the 6050I has been in effect for a number of years, but a lot of people don't encounter this because not many people carry that much cash and buy goods and services. So what happened in 2021 was that infrastructure bill passed, and as a result, they subjected digital assets to 6050I regulations. So going back to our example, instead of me giving cash to the dealership, if I give like 1 Bitcoin and buy a car worth, $50,000 or so, now the dealership has to collect my information and file that Form 8300 with the IRS and the FinCEN. So that's the change that happened.
And of course, when we're talking about a felony charge, this isn't for the individual. Let's just say, okay, let's take this example. So the same example as well. And I'm like, hey, I've got a bunch of Dogecoin and I want to buy that Dodge Grand Caravan. So I'm going to give this to you. Do you have a wallet? And they say, yeah, for some reason they're like, yes, we love Dogecoin here at the dealership. You give them Dogecoin and they don't collect any information from me. If they do that, then it's on them as the business owner, correct? It's not on me as the one who actually spent that crypto.
That is correct.
Great. So now all I got to do, you're telling me, is I got to find somebody. No, I'm just kidding. I'm not going to go down that route. You're telling me I just got to find somebody who will accept my crypto and not ask me for any kind of paperwork. Excellent. Okay. So we have that down. It makes a lot of sense. Is that it to the rule? How did we get this so misconstrued? Because I've seen this in a lot of different social media platforms, and we're talking about, hey, if you get $10,000 or more, it's automatic felony within 15 days. Where do we go wrong here?
Yeah, it's this key term, trade of business. So in our example, the dealership is clearly running what's called a trade of business, right? They're in the business of selling cars, therefore they have a business of selling cars. So a lot of people thought that this is applicable to everybody, even individuals, even if you don't have a trade of business. And I think what I was trying to clarify on Twitter was that the 6050I, again, it applies only to trade of businesses, meaning you should be able to carry some type of economic activity. It could be, selling cars, selling something as a business. If you do not do that as a business, you don't have a trade of business, and therefore 6050I does not apply to you.
So how does that, let's say, so any kind of transaction, let's just say it's me to you. And I'm like, hey, Xian, thanks for, I don't know, for any kind of, no, we can't say CPA, so we got an actual business. But I say, hey, here is the $20,000 that I owe you from the bet that I lost because the Cowboys lost last week or whatever it was. If we did that, is there any kind of laws that say that I have to, put in some kind of information with the IRS that I've transferred that types of funds to you?
So in that case, assuming I don't run a professional, betting service, I don't have a trade of business. That was just a one-time receipt coming from you, and I don't have any obligation.
Yeah, excellent. Yeah. All right. So everybody, that's just what I wanted to get across. I'm not going to beat a dead horse. So just be careful with the information that you get out there, especially on the Twitterverses and the social media sites, because it's all about sensationalism. And even I delve in that as well. I mean, you saw the title and the thumbnail. It's to get your attention, but I don't go too far to where it's give people heart attacks. I just want to give you the best information we possibly can. All right. So Xian, that would take care of that piece, unless there's something else that we missed. But what I'm going to do is I'm going to open it up for a quick Q&A, because I know you've got things going on in another 10 minutes or so. So everybody, if you want to ask Xian here, who is a certified CPA and that deals in crypto specifically, now would be the time to ask that. And I got a question for you, Xian. What's are there any new laws that we're not familiar with that are coming on the pipe that could change things? I know last time we talked, which the last video we did, I don't know if you knew that, but it had over 150,000 views. And it's the one that we talked about the government trying to ban non-custodial wallets, which is a great video. I urge everybody to take a look at it. But any other laws coming in that could affect us as crypto users?
No, I think the 1099 thing that we spoke about in the previous video, that's going to be huge when it gets finalized. The 6050I is going to be controversial as well. It hasn't been finalized or anything like that. That the law goes into effect January 1st, 2024. It does not mean that you have an obligation to report today, because in order for a law to be effective, you had to have regulations. meaning the IRS has to come and, kind of update the forms and kind of give you the specific information. So it hasn't happened yet. So you still have some time to kind of like, figure out how to comply with the 6050I. But just to summarize, yeah, the 1099 stuff and the 6050I, those are kind of like the two crypto tax related rules that's going to have a big impact on the industry.
Gotcha. Excellent. So yeah, everybody, I will try to link this in the description. Here was a video I was talking about. Look at that, 147K, excuse me. That was just an impromptu video. So hopefully, Sheehan, you get more followers on your Twitter account. All right, Sheehan, it's 5:40. I don't want to keep you. I know you got another meeting. But everybody, I'm going to stick around. We're going to talk about this dump today that happens in the market and go from there. Everybody, if you want to find Sheehan, there's a link in the description for his Twitter account. And of course, his link tree and everything's there. Sheehan, thanks for stopping by. We appreciate it.
Thanks for having me. See you guys.
All right. See ya. All right, everybody. That was good stuff. Let's talk. Everybody's been talking about this. Let's just go over this real quick. And everybody knows why there's a dump today. I'm assuming because everybody and their mother was talking about this. It was just from one report from Matrixport, where they said this is their belief is why the SEC will reject the Bitcoin ETFs, and basically it came down to politics and why Gary wouldn't approve it. And one of the things they said, which is one of the things I said, which was political divide. And they're right in this one instance where, as far as like the commissioners, it's Gary, Caroline, and Jaime. And those are the three Democrats, and Mark and Hester Pierce, crypto mom. They're both the Republicans, and it looks like they've mostly sided with Gary. So we'll see how it actually works out. But that was the reason for this dump today. I don't really care about dumps or pullbacks and things like that. What I do concern myself with is how I have never heard of Matrixport ever. It's just amazing to me how one article can drop Bitcoin. I think it was by 10%. 45. It's quite a bit. 45 to 40. No, it wasn't 10%. It's 7% roughly. So that's the thing that concerns me. And of course, people say, Rob, every market's manipulated. I know that's true. I mean, gold and precious metals, JP Morgan did that as well, and they got busted for spoofing the markets. But concerns me that our market is controlled and manipulated that little bit for one stupid article that came out that says, hey, we think this is going to happen, and everybody lost their mind. So it's just a good lesson, I think, that as we move forward, that stuff like that's going to happen. So I know people are like, well, I'm going to go long, I'm going to go short, I'm going to go on leverage. Did you see that coming? Did these leverage plays see it coming? No, the one they saw coming was an ETF potentially getting passed. I'm still on the fence about that one, but that's why I have the rules on the side. But of course, everybody can do what they want to do today. So look, everybody, thanks so much for stopping by. I appreciate it. If you like today's video, give it a thumbs up. Consider subscribing. Everything we talk about is time sensitive. That's it. And I will see you guys on the next one. Thanks so much. Adios.